Good afternoon, and welcome to the React Group PLC Interim Results Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged, and they can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll. And I would now like to hand you over to CEO Sean Doak. Good afternoon to you.
Thanks, Alex, and thank you for everyone that's joining us today. Alex, if you just move to the first page, thank you. So my name is Sean Doak. I'm the Group CEO. I was appointed CEO back in February of 2020, having joined the group earlier in March 2019 as Managing Director. I have a track record of growing businesses in the specialist cleaning, facilities management and HVAC service sectors, and I have a background in business management and sales and marketing. Over to you, Spencer.
As you would expect, I'm a qualified accountant. The last 20 years of my career, I've been in or around on public company boards. I've also done a short stint in corporate finance. And joined the board in February. Very pleased to be here.
And I'm Mark Braund, I'm the chair. I've been involved with the company for 5 years, got involved when it was in a bit of trouble, and we brought together the management team of Sean, who became CEO, and prior to Spencer, it was Andrea Pankhurst, and clearly, you know, they put in the hard yards to get the company through its first 2 or 3 years, and the last couple of years, you know, Sean and Spencer has been the driving force behind where we are right now. That's me.
So interim accounts and performance. So some of you will be familiar with the story here at React. You would have seen us before as a management team present, perhaps followed the story of React. But for those that aren't familiar with the story, the background here is of a turnaround, a successful turnaround. And if you just look at the graphs of revenue and EBITDA, you will see that the last four full years we show progressive growth. And really, the profile of the group now is of a group that's growing. It's got strong recurring revenues, strong margins, it's profitable, and it generates cash. In terms of the interim results, where we are this for the half year ending March 2024 is a continuation of the momentum from last year. We had a record performance in the year to September 23. And we've seen that same momentum continue over to this year, or this period. Diving into the detail, revenue is up 13% on the half year at 10.6 million. We have over 85% of that revenue is recurring revenue. We've got gross profit in growth similar, 15% up on the prior period at 2.9 million. Gross margin is upper quartile for our sector. It's over 27% from our blended services across the group, which is up. It's up from last period. Adjusted EBITDA, we've got 35% growth at 1.3 million. And aligned to that growth is our growth in free cash flow, again up 35% at 900,000 for the period, up from 700,000 the period from last year. As a management team, we do look at adjusted EBITDA and free cash flow. You would have heard us say this before. The relevance of which is for adjusted EBITDA, it's a profit measure that is before certain non-cash items and certain one-off items, the profile of which does align closer to our free cash flow. Obviously, cash is a key metric for us as a management team, and I guess for investors as well. Basic earnings per share, we were profitable in the period, and we've got an earnings per share of 0.41 pence versus a loss this time last half year of 0.41 pence. Earnings per share on an EBITDA or adjusted EBITDA basis were over 6 pence, up from 4.5 pence this time last year. So what we've got here is, in summary, it's a solid, strong start to FY24. Clearly, the momentum is carried over from what was a record year last year. And we've got a strong set of numbers.
Brilliant. Thanks, Spencer. Alex, just move the page. Thank you. Okay, so React carry out specialist contract cleaning and soft FM services across the UK. We're focused on markets with non-discretionary requirements, typically complex demands, and quite often over a nationwide fulfillment criteria. As we've continued to scale the business, we've continued to establish an increasingly unique proposition in terms of our scale, our range of services across the group, and of course, our geographical delivery. We operate within a very fragmented market. As we've said before, it's very sizable, and we believe we've got huge scope to continue that expansion, that double-digit organic expansion that we've had year on year. And our strategy is focused on building out a business with class-leading performance. We have the aim of achieving a minimum 5 million plus of free cash flow per year within the next 3 to 5 years. Now, within the group, we have 3 divisions. The first division that I'll concentrate on is the core division, which is React Specialist Cleaning. So that was what we had when Mark and I got involved in the business. Predominantly looks after the emergency and decontamination side of the group. So typically we can be required to be on site within 4 to 6 hours. Can be anything from an unfortunate fatality on the rail where we've got to be out, very quickly decontaminate it and get that train back into service, all the way through to some really specialist deep cleaning of some hospital sites, specifically within the M25 corridor. Second, we've got Fidelis. So that's our maiden acquisition completed some 3 years ago now. And that's our hygiene and maintenance work. So it's contract maintenance work. So typical commitments from the customers within this division are anything from 3 through to 7 years. And we are very strong in the industry, the healthcare, and also the education. And then the final component to the group, or the final division, is Ladders Free. So that was our most recent acquisition, completed some 2 years ago now. Commercial windows and cladding cleans. They've very much got a who's who of customers, ranging from well-known fast food chains all the way through to some prestigious retail customers. And typical commitments from those customers are anything from 12 months through to 36 months. Just moving on to the next slide, please. So looking at our customers, we work with very much a who's who of customers, from blue chip customers through to large FM businesses here in the UK. Clearly, we operate across a very diverse and resilient range of market sectors, as I said, where the requirements are typically non-discretionary. We've got a very low customer concentration, some 1,200 customers across the group, 230 of them are material, and our top 10 represents less than 43% of the revenue. So just a few, logos there give you an idea of some of the sectors that we work with and some of the customers. So it is very much a who's who of customers. As we move on to the next slide, look at growth. So we've had very strong organic growth, double digit again. This is the 5th year now that we've had that. It's been underpinned by some large deals and obviously a lot of smaller successes that, due to the size and scale of the business now, we've not been able to announce them. Now, I'm not going to walk you through every single one of them on the slide because we'll be here for a good 20 minutes, but I'm just going to tease out some notable wins. The first is that renewal of that material 3-year contracts with a large university in the Midlands. That's with UCB. We've almost doubled the scope and the size, giving us £1.3 million commitment from the customer per annum. And that really is working with the customer, understanding the concerns and how we can cross and upsell. So now we are doing some cladding cleans, glazing cleans through the Ladders Free business, and we're also doing some more reactive kind of work through React Specialist Cleaning, as well as the core business being delivered by Fidelis. Second one is that 2 large incremental specialist cleaning contracts, both worth £500,000 per annum. One is with a large international FM business, looking after some work within the Ministry of Justice. And the other is working with a mid-sized UK FM business for a well-known, prestigious sandwich and food outlet across the UK. Ladders Free, we've continued with our success in winning new business. We've added 3 new nationwide customers to the mix, which has been brilliant. And we picked up a 2-year contract worth £500,000 a year with B&M, over 700 locations nationwide. So that's covering internal cleaning of the windows, external, and some cladding and some trolley bay cleaning as well. We've also had some material post-period wins. We've had 3 significant multi-year specialist cleaning contracts worth £500,000 renewed in the healthcare sector, with uplifts in scope and revenue again by cross-selling across the group. So in summary, we've had our growth underpinned by strong customer retention, contract wins and cross-selling success. And I'm handing you back to Spencer.
Transitioning to the next phase of growth. So Ladders Free, you're aware that we bought the business in 2022. It's in Exeter, and it takes looks after a national window cleaning for us as a group. Great business, very profitable, generates cash. Financial metrics are very strong. What it needs is automation. Its back office is very manual. We're currently mid-project to build a platform that will enable that business to scale efficiently and effectively. It is an MVP. We're spending £300,000, investing £300,000 in this platform. It's going to be built in the Microsoft Azure tool set. The software house that's helping us with this piece of work has done this before. Like I say, we're mid-project, and the current timetable, we plan to be in user acceptance testing in the summer, and following successful user acceptance testing, we will plan go live later this year. The project, like I say, is just midway through, and we are within budget and within the the project time frame. So that's one example of investment into the business so that we can grow. The immediate need is for Ladders Free and for its current service offering, but we have one eye on other group services and other services with a view of developing that model. There are other initiatives that we have underway. We've just about to complete the move to HSBC, so that's a single banking supplier. That will give us access to treasury management facilities, but also importantly, it will be a single relationship that can support the group going forward. HSBC have been very keen, and they courted us for a very long time as a result of the group's recent history, and they're very supportive. We will also continue to look at the rationalisation across the group. Effectively, we've got 3 different divisions, and we'll be bringing those closer together. So we'll have some other, discrete projects that we will look to develop for the group.
Brilliant, thanks, Spencer. Just continued on from where Spencer's left there. We will continue to strengthen our management team, both functional and executive. We have recently promoted 2 individuals. Dave Rudge, who joined the business about 4.5 years ago. He initially was the operations manager on React Specialist Cleaning, got a wealth of knowledge in this space, having worked for ISS, Hitachi, Mighty, and so on. He's now heading up the Ladders Free business as divisional director, working very well with the team, being very present with our customers, understanding the challenges and the opportunities out there with our customer base, and is really driving that business forward. We've also got Chris Ryan, doing a fantastic job over at Fidelis. He's been with the business now 26 months. He originally joined the Fidelis business as sales manager, but has, again, a wealth of knowledge within this space, having recently worked for Bix before he joined Fidelis. He now heads up that Fidelis business as divisional director, and again, doing a fantastic job, working very closely with customers and all stakeholders throughout the business. Really driving that kind of control and measure, putting the right process and procedures in place to give us that headroom capacity to continue the growth trajectory of that business and indeed the group. We said we'd invest further in the sales and marketing. We continue to do that. We continue to unlock new opportunities for organic growth. We use an external fractional marketing company with a little bit of AI thrown into the mix. So depending on how customers or potential customers interact with our socials or our email campaigns, that triggers different sequences with the help of AI, and that feeds straight back into our CRM system, HubSpot. And I sit on and share the group sales meetings that we have with the entire team and the divisional heads to make sure that we're looking at the right opportunities. We're going after the high margin work. We're not scared to pivot away from perhaps those sectors where margins have been eroded, and we're always looking, to push the business forward. Just on the investment side of the sales and marketing, we've just brought Debbie Flynn into the business. Again, a wealth of knowledge within this sector, having worked for for Safe Group for some years prior to joining React. Prior to that, she worked for Rentokil and Norland. So again, a wealth of experience, and she's working incredibly well under Sam Hayward, our group sales director, who again, worked for a who's who of Equans, Norlands, you name it, and he's really doing a fantastic job driving the right opportunities into the pipeline and improving our conversion rates with the help of marketing, and the activities that they're underpinning. And the final component on there is we've reignited the M&A activity, and I'll pass you over to Mark because it's something that he's leading the charge on.
Thank you, Sean. Could you just turn the page, please, Alex? Thank you. Basically, it's been the last 6 or 7 weeks we've started to relook at M&A as potential. And look, we've got a track record. We've done 2 amazing acquisitions that have totally transformed the company from being a £4 million loss-making business with recurring revenue of less than 30% to the numbers that the team have talked you through today. We've taken on Fidelis, and we've more than doubled the revenue. That's through cross-selling and upselling and taking on new customers. And we're beginning to do the same with Ladders Free, albeit slightly compressed by the fact that we do need the technology to help us with the back office in order to cope with the same degree of growth, but also deliver the same degree of quality. So we have a track record, and we are very disciplined in our approach. We see M&A as a pathway to accelerating growth in shareholder value. That's the reason we wish to do it. No other reason. And we will use a disciplined approach like we have done before, both in terms of selection and valuation. The objectives are fairly straightforward. We have a massive opportunity to consolidate in a very fragmented market. That's the specialist soft FM services market. And we believe that we're one of the leaders, if not the leader, and we want to establish that position as a from a reinforced point of view of being the leader in the space. M&A doesn't only add revenue and profit. We believe it represents a tremendous opportunity for us to create further organic growth, and we've demonstrated that with the acquisitions we've made so far. And we've told you the stories in the past of how we've cross-sold and upsold with customers specifically, and we can see us doing the same with anything else that we acquire. And we also see, as you've begun to see in the latest set of results, that we can begin to leverage our scale to drive more profit from smaller increments in terms of revenue growth. So that's the objectives. Overall underpinning that is the fact that we want to accelerate our pathway to growth in shareholder value. In terms of criteria, what do we look for? Well, the first thing I think to say is that we're only looking for things that are relevant to the customers and the buyers that we work with today. We're not looking to go off piste and do something weird and wacky. We want to focus on the same customers because they trust the brand, they trust the team, and we believe that's the right way to compound and grow the company moving forward. Anything we look at will be accretive and earnings enhancing in the first full year. And we do spend quite a bit of time looking at cultural fit because we want to buy businesses that share the same values as us from the get-go. We want businesses that are focused on being the very best at what they do. And we also want a team of people that are excited to get up in the morning and go to work. So cultural fit is an important factor when we've looked at businesses in the past and will be going forward. The final bit is how we structure, how we fund a deal. And the first thing to say is that every deal we've done so far, and I expect every deal we'll do in the future will be structured so we don't need all the cash up front. So structuring a deal is something we've done before. Spencer is an experienced person at doing that as well. So structure is important to the funding process. We're also, as Spencer highlighted earlier, not only are we a cash generative business, we're now moving to a period where all the cash we generate ends up in our bank account. This Friday, we'll be paying the last payment to Jason and Justin Korenik, who are the founders of Ladders Free. That goes out the bank on Friday. And after that, every pound then goes into our bank account that we generate. Spencer's also highlighted the improvement we have now with an enthusiastic bank to help us support our growth objectives going forward. And obviously, we'll be looking at that. But I want to reassure people that we will not be looking to over leverage ourselves. To give you a measure, I don't think we'll be looking to go much above 1 times earnings in terms of what we look for to generate in terms of debt. And then only under the right circumstances would we look to equity. We want to see our equity or our share price higher than it is right now. We think personally that the share price is understating the value of the business. But in the right circumstances and for the right opportunity, we would add in a level of equity should it be required. But the other components are the ones that we would turn to first. So that's it in effect. It's it's now on the agenda alongside the organic growth story that we've delivered and will continue to deliver, is trying to find the right opportunity that will secure future growth in shareholder value going forward.
Brilliant. Thanks, Mark. Just on to the summary and outlook slide then, please. So as Mark just said, we've had a record performance in H1. The momentum continues into the full year. We've had a track record of double-digit organic growth in what is a highly fragmented market. 85% recurring revenue. When Mark and I walked into this business some 5 years ago, that was around about 32% recurring revenue, loss-making on a revenue just over 3 million. Now we're at just 20 million and above, and translating into strong EBITDA, high margin, strong cash conversion. And ultimately, we believe we're well positioned to achieve our 3 to 5 year goal of that £5 million plus of free cash flow per annum. Thank you.
That's great, Mark, Sean, Spencer. Thank you very much indeed for your presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. While the company take a few moments to review those questions submitted today, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Mark, Sean, Spencer, as you can see, we have received a number of questions. And Mark, if I may now hand back to you to chair the Q&A, read out the questions where appropriate to do so, and I'll pick up from you at the end.
Thank you, Alex. Okay, so I'm going to just do them in order, gentlemen, if that's all right. Hopefully you can see them written on the right-hand side of the screen for us as well. Yeah. The first one is from Alex C. The strategy includes a shift away from lower margin opportunities towards higher margin segments. Can you elaborate on which specific segments or services are being targeted for higher margins? Sean?
Yeah, thanks, Mark. Great question, Alex. Okay, so yes, we have had a shift away from some lower margin opportunities. Can you elaborate on which segments or services being targeted? It really is job specific, if I'm honest, Alex. We always look at, is there a specialist element to the specification and what that entails? If it's a, kind of a traditional kind of tender route. Conversely, it's usually born out of discussions by being present with our customers and understanding the challenges. So it's usually something that they're struggling with, whether or not they've had poor service provision in the past, or it's an entirely new piece of work. So we'll always look at crafting a detailed specification around that so that it gives our customers the best bang for their buck, but also where we can eke out high margins. In terms of what we're going after on the Fidelis business, I think I touched on it earlier on the presentation. We're very strong in healthcare, education, and the industry. Ladders Free is very much a who's who of customers, so we're not focused on just one sector. It is very much broad brush, and that continues to be a focus of the sales team. And React, if you know the story, it's the kind of the thin edge to the wedge, the sharp end of the spear. We can do, react to any cleaning need across the UK. It could be an existing customer, it could be a new customer. We can be on site within 4 hours, and that often allows us to land and expand. And due to the nature of that work, reacting within 4 hours is often high margin. but also there's bigger opportunities in that space where sometimes we'll give margin away to allow us to cross sell and land a more material piece of work.
I think it's also true, Sean, to perhaps highlight the fact that you won't see us going after huge contracts because they are a race to the bottom in terms of price. We're very much a specialist business, so we want to focus on the specialisms within different sectors. So predominantly you'll see us, although we do have very large customers, we'll be doing discrete pieces of work for them, hopefully at scale across multiple locations. That's where we really do come into our own. You won't see us necessarily doing the work for one large building in one city, because that there are plenty of competitors that can cope with that. What competitors can't cope with is delivering the multiple services that we deliver across the UK, anywhere at the same level of standard and for the right price. So that I think is where we're strongest. Different segments for different products. There are a couple of segments that maybe we've started to soften our focus on. And we don't want to be too, because some of this is a bit commercially sensitive, but I guess one example would probably be the judiciary, isn't it, Sean?
Yeah, prime example, yeah.
So that would be one area, but yeah. So unfortunately, we're not got a crisp answer for you. It's this segment, that segment, and the other segment. It's more a horizontal view, but of some very key customer markets. And I think the key thing is where there are non-discretionary services. In other words, if the work is not done, the customer is unlikely to be able to use their premises, or if they do use it, it's likely to give them a bad reputation. So it's non-discretionary, and where it's valued, the quality and speed with which we can operate, is valued by the customer. That's really where our high margin opportunities are, and the market for that is massive.
Yeah, and I think just on the back of that as well, Mark, it's probably a good point to say that we're not scared to move or pivot away from the customers that we've worked with for a few years if margins have been eroded, because at the end of the day, this business is about shareholder value, and we also need to work with customers who value our proposition. Yeah. And if customers don't, then there's plenty of work, as you said, out there where customers will value our proposition, and that's where we'll get the higher margin.
Yeah. Second question for you, Spencer. Can you elaborate? It's from Dexter B. Can you elaborate on why the tax payment this half is considerably lower to H1 prior year?
Yeah, absolutely, Mark. It's a timing issue. We had a corporation tax liability at the year end of just over £250,000, £262,000. As we finalise the tax returns and finalise those pieces of work, we will then be paying tax. So yeah, it's going to happen in the second half year.
Thank you. Next question is from Jonathan C. Well, things look good compared to H1 23. They seem less rosy in comparison to H2 23. Perhaps unfairly, it might look as though most of the growth being seen now looks to have been won last year and now coming through. Do we expect double-digit growth for H2 24 versus H2 23, or will the growth rate decrease below 10% for the full year? So look, I want to give some guidance in terms of how we can answer that. We cannot answer the last part of that. We're not going to give you a forecast on H2. I'm afraid that just wouldn't be appropriate. But it is a good question. And I think that, this is partly for you, Sean, and partly for you, Spencer. I think one of the things we need to perhaps make sure people understand is when we win new contracts, some of them can be mobilized really quickly, but some of them do take time. And therefore, there's a lag between us winning stuff and us actually deploying it.
Yeah. So, entirely that, Mark. I mean, some contracts can mobilize within 2 to 4 weeks, but some have a longer period that could be 3 months. It depends if Tubi's involved. It depends if there's an incumbent and they're trying to navigate that. So, obviously we want to start as quick as we can, but that's not how the world works, unfortunately.
Anything to add to that, Spencer?
Only to the extent that the pipeline's strong. Obviously, there's no promises there, but we've got a strong pipeline, strong as it's ever been, and the business is trading nicely. But yeah, it's difficult to give a forecast.
Yeah.
Brilliant, thank you. Okay, next question is from Neil B. is there any danger of losing key people after the final deferred acquisition payments are made later this year? Sean?
Yeah, I'll take that one actually. So the founders, Jason and Justin, Mark mentioned them earlier of Ladders Free. They've been in a part-time consultancy agreement or role since we acquired the business. They have agreed that they will be on hand as and when we need them, moving forward. The relationship is fantastic. Both, I think I've said it before on this platform, stand-up guys, built a fantastic business. I had a conversation with them a few weeks ago, and they basically said, they couldn't have asked for a better acquisition, the way that we've treated the team, the way that we've pushed the business forward and put in the right technology. So, there's a lot of knowledge in their head, but we've now gone through that handover period, and Dave, as I said, is doing a great job at leading that business. But should he need Jason or Justin's comments or help, they're just a phone call away. So.
Yeah, indeed. No, well answered. And I think the other key thing is we do have capability spread quite well across the business, and Justin and Jason, in terms of their full-time involvement, pretty much stepped back into that consultative role fairly quickly as soon as we got Dave in place.
Yeah.
So I think that's the answer. Thank you. Question from Neil B: are there any new sectors that you are targeting? And this will be for the organic side.
New sectors, God. Not off the top of my head, no. I mean, there's always incremental growth by adding on additional services. But we are very much focused on where we get our biggest bang for our buck. We're constantly reviewing it, of course. And like I said earlier on in the presentation, we've got depth in our team where we've got, should we want to pivot or go after an incremental, sector, we can do that. But I think we need to stay true to what we know we can do and what we're good at doing, and not to be distracted by that.
Absolutely. Perfect. Okay. Next question's from Freddie A. For the 3 contracts announced on the 4th of April that were renewed and or extended with potential value of 1.3 annually, can you break down that 1.3 as to what are continuation revenues and what are incrementally new revenues? So, Sean, 2 of those worth £1 million a year were absolutely brand new to us, weren't they?
Yeah, they were. So one was in addition to a core vendor agreement that we got with the Ministry of Justice. And another one was, I think I mentioned it earlier in the presentation, for a prestigious food outlet. So yeah, completely new.
And then the other one, the 800K over 3 years, that was a renewal but uplifted, wasn't it?
Yeah, renewal but an uplift, but I can't remember off the top of my head what the uplift equated to.
I think it was about 30% from memory.
Yeah, I think something like that.
So hopefully that answers your question, Freddie. Neil B, how are you maintaining the quality of your service?
A number of ways, really. Look, this is how we operate. So like I said, we don't lock people in tender rooms. We get incremental work and we get new contracts simply by being present with our customers. So we understand the challenges, boots on the ground. We have a very inclusive environment where everyone has a voice within the business, even operatives at ground level. So there's those conversations going on between them and divisional heads. And as I said, we have multiple management calls throughout the month, and I chair 3 or 4 meetings every single week. We carry out the audits, so the whole business uses the same auditing system to ensure that standards are being maintained. That automatically goes back to the client. We always have a client review meeting, capture any issues before they become a major issue, which is very rare. And just by employing the right people, I guess, and having the right culture. No one has the monopoly on being right. I certainly don't. Mark doesn't, nor does Spencer. And it's about listening to the enlarged team. Everyone has their strengths and everyone has their weaknesses, and that's why we have a great team.
Brilliant. Next one for you, Spencer, is from George S. How much is the final payment this Friday to the Ladders Free founders? You're on mute.
890,000.
Perfect. Thank you very much. DSO is still around 80 days. How much scope for improving do you see to improving working capital efficiency? That's from Dexter B.
Yeah, absolutely. Sometimes it depends on specific projects for specific reasons, but we're very focused on that. Clearly, cash receipts are very important to us, so we manage all of it carefully. Yeah.
I think there's something else to be added here, and that is that when you look at our DSO, it's not really an accurate reflection of our uses of cash in the sense that all of the ladders free business, no cash goes out the door for the work until we've got cash in. So whilst the actual invoice itself may take time to pay, we've not actually incurred any cost other than the operational head office overhead, which is relatively small by comparison to the overall revenue and margin. So that's one element. We also have a factor of that within the Fidelis business, where there is a proportion of the revenue that is paid by the customer either at the same time as we pay the cleaning staff or just before. So again, that DSO component, whilst we're not taking our eye off the ball, it's not quite telling the full story of cash within the business.
And I'd add to that, Mark, that sometimes we bill in advance, and clearly that has an impact and a relevance to the DSO calculation.
Yeah, I think there's a final comment, and that is that, the bigger the customer, the bigger the project, the longer they sometimes take to pay you. So there are one or two out there that are notorious at this, but we have to manage through those.
Yeah, certain projects are more complex than others, but it's the nature of the beast as well. Yeah.
Great. Can you give a feel for the rates of top line growth in H1 for Fidelis and Ladders Free? At the moment, I'm not sure we're in a position to, show that. Sorry, apparently I'm having a few network problems, so apologies if I keep coming in and out. Sorry, what was I going to say? So I'm going to turn my camera off, actually. That might help things. Yeah, I'm not sure whether you want to comment about it, either of you, but actually broken down at the divisional level, I'm not sure that that's either A, helpful, or B, something that we want to get into detail on, because we're very much focused in looking at our business by the segments we do the segmental analysis on. And there is a sense that there will be revenue that belongs in one of the other divisions that may be reported in the other division because it's the cross sale, etc. So I'm not sure. I think it's going to confuse matters if we go down to effectively that old divisional level, which we're no longer really running the business by.
Yeah, I'd leave that, Mark. I mean, look, we don't really look at it on divisional level either, as you just said. So, and there's cross charges because of the way that revenue is allocated when we secure business, because it's cross sell.
Okay, good. Dexter B, what is behind the margin reduction in contract reactive?
Quite simply, it's the mix of jobs that are coming in at the moment, and some of the contract reactive across the group is at slightly lower margins than what it perhaps would have been when we looked at the business in isolation with React Specialist Cleaning. It's as simple as that, really. But it is, the contract reactive is, you kind of in the hands of the gods, so to speak, in terms of what's called off by the customer. We have a line of sight on what generally the revenue looks like on a month-to-month basis, but we don't have any control of what jobs are called in. Some of them are slightly higher margin than others.
Okay, great. Thank you. You touched on AI during the presentation. How much and where do you see further opportunity in your categories? Well, the further opportunity, I think there's a significant degree, but do you want to cover that at all, Spencer?
Yeah, absolutely. I mean, we're certainly building a platform within Ladders Free that will have some components that can lean on that. I think, Sean, you've got some AI in some of your sales models to drive new business. and we're continuing to challenge ourselves where else it's relevant in the group. And it may well factor in the back office rationalisation as well.
Yeah, I mean, I think in terms of future use, there's a number of different things, but I think it's predominantly in terms of, a couple of key things. One is, making our operation slicker, quicker, faster, better. In terms of the whole workflow processes. I think in terms of pricing, it will come into being a helpful tool. And I also think in terms of reporting, what we're seeing is a desire, not a demand, because I think we're creating the demand for reporting to our customers, because it's just not been available before. Where we're actually reporting, on the work we've done and the status of their, whatever it is we're cleaning, let's say it's windows or high level or guttering, whatever, we're able to give them a reporting visibility that they otherwise wouldn't have had across their estate. And AI will help us deliver some of those things, but that's a little bit further down the line once we get over the sort of minimum viable product that we're focused on right now. David S. It is excellent having such high levels of annual recurring revenue, but when you gain new contracts, do they sign for a minimum term or a whole year? And what percentage do not renew?
Okay, so it depends on the definition, whether it's contract. That would be typically contract maintenance work. So contract maintenance work, I think I said it early on in the presentation. If we're looking at the window cleaning, it's anything from 12 months to 36 months commitment from the customer. If we're looking at the contract maintenance, and the hygiene, which is typically the Fidelis model, then it's usually anything from 3 to 5 years with the option of +2. Now, obviously, there's a little bit of churn, but the churn really has been out of design from us to move away from low margin work. And at the end of the day, if we look at Fidelis in isolation, we've doubled the revenue, since we completed that acquisition. And we've improved the margin mix. So we're obviously doing the right thing, and that feeds, hand in glove back to the operational gearing and also the sales and marketing activity. So I hope that answers that question. I don't have the exact metrics on what the percentage is on the churn, but it's much lower than industry standards, that's for sure.
Yeah, I was going to say, we know it's very low, very low. But what I would also say is one of the things that Spencer and his team now bring to us is much greater management information. We were very much bootstrapped over the first 3 to 4 years of our existence. We now have the luxury of some management information, and we want more. And developing some models around that sort of that churn component, and I think specifically where the company will actually look very, very, very good is on NRR. So I think we do want to measure that consistently across the group, because I think if you look at the rate at which we retain business, renew business, and also upsell and cross sell, I think our NRR ratio is going to be in excess of 100%. And some, I think, but we'll see. We're just not there yet in terms of having the resource to throw at providing an accurate and consistent measure reliably on that yet, but we will do. Okay. Dexter B, how evolved is your pipeline of potential acquisition targets? I guess that's one for me. It's we've had a look at a load in the last 6 weeks, just IMs. And they're very easy and quick to spot what we don't want. So sort of 90% of it has ended up going in the junk file. And we've got a small handful, a really small handful that we're sort of starting to look at a bit more seriously. So it's not that well evolved, but that's not to say there isn't a potential opportunity sat within the pipeline we have that we couldn't move very, very quickly on. We just need to go through the gears. We've engaged with 1 or 2. We've got under the covers, and it's about getting to a point where we feel confident that what we think we see is actually what is there. So not terribly involved enough that we are starting to see opportunities that are looking very interesting. Hopefully that answers that question, Dexter. Dexter has asked another one. Any thoughts on the potential impact of a Labour government? Great question.
Being from the northeast, no comment. No, just joking. So I think we touched on this on previous presentations. Contracts have uplifts baked into them. So if there are any changes to living wages or inflationary costs, that they're all baked in anyway. Do I see it being a negative or a positive? Not really. I don't think it'll impact the cleaning sector much, if at all. If I'm honest. So no, I don't. I think the only chatter at the moment is that they would like to take rail, nationalised again, but we don't do as much in that sector as we once did, simply because margins have been eroded. Coming out of COVID, that's an industry that is got its challenges at the moment. So I don't think it'll have an impact, but obviously we'll keep a close eye on it.
Good. Okay, and hang on, there's a couple more here. How do nationwide companies find out about you and invite you to tender? How much competition is there, and what percentage do you think you win?
Okay, so they find out. So we're on all of the portals. So if there's a piece of work that they want us to tender, then that will come in that way. But as I said early on in the meeting, it's not really our area of focus. If something comes through and we think it's in our sweet spot, then of course we'll go through it. I think when we analysed that for the board pack, I think we were winning about 2 and 3. And how much competition is there? In terms of competition, it varies. We do analyse that, as I said earlier on, that we'll not go for anything where we think it's going to be single-digit margins and there's going to be 20 people going for it. We think we can focus our time and attention on something else. But generally, nationwide companies find out about us because we go hunting for it, and I think that's where we're different to the big boys. We work with the big boys. So the big 5 are our customers, but we go hunting, and we go hunting by if it's an existing customer, then we've got a relationship there, and we'll go hunting for incremental work or cross sell. And if it's a new piece of work, then again we'll be knocking down the door, utilising our sales and marketing approach. Simple as that.
I mean, there is a situation, isn't there, Sean, that we actually have a lot of nationwide customers today that don't use us nationwide for all of our products.
That's
so
true.
The actual white space in our existing customers is actually huge.
Yeah, correct.
We've got several great examples of where we've won, and we use those to reference ourselves to the others.
Yeah.
So we're not without opportunity. I think your point earlier on is we absolutely qualify the opportunities to know where we are, the most competitive and have the value proposition, and that's where we focus.
Yeah.
Many times in the past, companies, we probably would have been guilty of it 3 or 4 years ago, go after things where actually they're not really going to win. Yeah. So we don't bother.
Yeah, indeed. I think, look, the bottom line or the key word here, Mark, is sophistication. We're a lot more sophisticated now than we were certainly 2 years ago. In fact, you could even argue a year ago, bringing in Spencer and Justin and, the promotions of Chris and Dave and Sam, we're just in a much better and more professional and sophisticated position than we were, 6 to 12 months ago. So we're always reviewing it. The control measures are there. We know what we need to look at. We know what margin we need to be hitting, and we know what the right opportunity looks like.
Got it. Last question is from Dexter B. Are you seeing any signs of distress in the market, primarily for the subscale operators?
Okay, well, I don't know what he means by subscale operators.
Well, so the small guys in the market.
No, not at all. Not seeing any real signs of distress, if I'm perfectly honest. We've seen some sectors that 3 or 4 years ago were much higher margin than they are now. But no, not really. If I'm honest, Mark.
No. We see a lot of people trying to retire or want to move out for work-life balance reasons, but not really distressed. There are no sort of distressed sales out there for us to look at and pour over. I apologise, by the way, guys. There were a couple of other quick questions. Let me just go through them. Neil B, why did the ad hoc division fall in H1? Is there any recovery expected in H2? Margins have remained below contract maintenance. Is there any scope for recovering the premium margin? Can I just
Yeah.
we don't want to forecast in our response.
Yeah.
What I will say is one phenomena we've seen is that ad hoc gets us into a customer because we're dealing with an emergency situation very, very well. And therefore, ad hoc customers can become, and sometimes, in fact, more often than not, become established contracted business.
Yeah.
So you will see this natural ebb away from, we have to continually add more in because by its very nature, it's just based on individual projects. But would you add anything to that answer?
No, not really, Mark. I think other than I can think of 3 examples straight away, 3 or 4 examples that would have started last year as ad hoc pieces of work, which now fall into the contract mix. So, very much focused on our strategy of, land and expand, getting in, sharp end of the spear, as I said earlier on in the presentation, that ad hoc piece. And the guys are very, very good at converting them into contracted pieces of work. And don't forget, the sales team are paid on margin as well. So they're paid on GP. So we're not paying them on revenue. So there's always that focus on, eking out the contracted piece and also the high margin work.
And what's your view on the margin in ad hoc?
So question, margin remain question. So it depends on the mix again. Sometimes we get a piece of ad hoc work where we know it could lead to a much bigger piece of work very, very early on in that kind of relationship period. Whereas conversely, it can go the other way. It could be a small piece of work, which is a £3,000-4,000 job. Run us on site within 4 hours, but we know that we're perhaps only doing it because the incumbents let them down, and then we'll go back and we'll revisit it as part of our strategy for the sales and marketing. We'll keep sending those messages until the incumbent becomes us. So it's horses for course, Mark. It's difficult to answer that one.
I think there is another feature here, Sean, that you and I have discussed in the past. And that is that when there's a small single piece of work, margin can be very high.
Yeah.
When it's a much larger piece of work, the margins are compressed, A, because it's a bigger piece of work, and B, because we do have to pull in some subcontractors, trusted partners that we've worked with before, that does compress our margin. But we want to do the work because we want to deliver the service and turn it into something else. So it's a complicated answer to a simple question, but there are a number of moving parts here.
Yeah.
And at the end of the day, the ad hoc business is very much our pointy end of the spear, as opposed to our what we're relying on for margin and profit.
Yeah, exactly that.
Okay. James C. asks, what's the potential does the company see for further cross-selling opportunities with existing customers? I sorry to paraphrase, but it's big. It's very big. We got a lot of customers. We do a lot with a few of them, in fact, many of them, but we see there being a huge amount of white space.
I think just on the back of that as well, Mark, it's a good point to just pause and say that a lot of companies promise and say that they'll either cross-sell or upsell, or they can, but invariably very few do it. Whereas we have already got material contracts as a result of cross and upselling.
Yeah, absolutely. And then the final question, the genuinely final question now, is from Neil B. How advanced are any potential acquisitions? Singers have a targeted 26% uplift to earnings from acquisitions in their target price. And again, I answered that earlier by saying, we're at the start of a process, and there's nothing that we have today that we can say is through the final stage of qualification. We are still qualifying, but there's some promise in there.
Yep.
That's great, Mark, Sean, Spencer, as always. Thank you for addressing all those questions for investors today. And of course, the company can review all questions submitted today and will publish those responses on the Investor Meet Company platform. But before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Sean, could I please ask you for a few closing comments?
Yeah, thanks, Alex. Look, I think we're in a very exciting time here for shareholders and everyone involved in the business. We came into this business 5 years ago, less than 35% recurring revenue on a business that was turning over just a little bit more than 3 million and loss making. Fast forward 5 years on, this is the 5th year of double-digit growth, 35% earnings growth from a 15% uplift in revenue. I just think it's an exciting time for everyone involved, and thank you for joining us today.
Fantastic. Sean, Mark, Spencer, thank you once again for updating investors today. Could I please ask investors not to close this session, as we will now be automatically redirected to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of React Group PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.
Thank you.
Thank you.